Please take your seats. We're about to start our next panel.
Devices in case people speak different languages. I think that most of this panel will be done in English, but you never know. Plus, we will have questions from the floor, so it's always handy to have your handsets for translation with you. Once again, my name is Tomas. I am CEO of EU Future. It is my privilege and honor to be the moderator of this panel because I think it is very, very relevant. And before we get into the discussion, I will give you a brief context about what we're going to talk today, and I will introduce the panelists. And by the way, same as yesterday, we're going to have a poll question that you as an audience can vote on this screen during the panel. I would like to ask to put on the question on the screen. Будь ласка, поставте на екран питання для голосування.
Please give us the question for the votes.
So the question is as following, and I really encourage you to go and vote either using Telegram bot or at this website using this code that you can see on the screen. The question is about investing in the emerging market, and you have 4 options to reply. Would you rather invest in, first, an emerging market, second, a developed country, third, both, or fourth, only in Ukraine? Please go ahead and vote, and we'll see the results at the end of the session. And I think that thus we'll combine both expertise and insight from our distinguished panel as well as from the audience. So I would like now to invite the panelists to the stage. Please, all the panelists, please come up to the stage. I will introduce the panel and you, and then we'll kick off the discussion. Please. Hi. Доброе утро. Ще раз вітаю. Everybody's here? Yes, almost. Yeah, you can see your names on these booths, so in case you want to be sure. So first of all, I want to really say that personally for me as a business person, I cannot think of a better crowd to discuss investing in emerging markets, because you guys are hands-on doing this every day. This is your job. You're submerged into it 24/7, and I think that the insights and experiences that we're going to hear from you are the most valuable ones and actual ones. But before we dig into the discussion, I would like to give a quick intro and put everybody in the context. Now, investing in emerging markets has always been pitched as pursuing more risky, yet more profitable opportunity. That's how we often sell Ukraine, accept access to talent, abundant resources, and virtually the last untapped market, big market in Europe. However, over the last years, a lot of things have changed. Starting last year, everybody has been talking about upcoming recession or economic slowdown. Last year alone, S&P 500 lost all of the value it gained during the year, and the geopolitical tensions and the trade war have all been weighing on the economic growth, and the World Bank and the IMF announced about the synchronized global economic slowdown. Now, talking about emerging markets, except China and India, by the way, the Financial Times in its article in July this year said that for 2 decades after the creation of the benchmark MSCI Emerging Markets Equities Index, emerging market stocks tended to outperform S&P 500 by a wide margin. However, for the last decade, emerging market stocks have stagnated, while US stocks have gained more than double in value. Foreign direct investment into emerging markets as a whole fell last year to its lowest level since the 90s. And this is according to the Institute for International Finance. Now, there are 3 main reasons that they give for this. One is threat to globalization, second is slowdown of growth in China, and the third is the end of a decade of easy money, as they say it. At the same time, we hear all the time that the world is overfilled with capital that is dying to be deployed as investment, but lacking worthy and suitable projects. So we see another side of this paradox when many of the G20 countries actually and national banks, they lend at 0 or negative rates. Almost a third of all government bonds issued this year are traded with negative rates. And at the same time, investment in the emerging markets fell to its lowest since the 90s. So it seems to me like international investors would rather stash their money in loss-making government bonds than invest in the emerging markets. At the same time, including organizations on this panel, announced about increased investment in Ukraine, new funds are being raised, new projects are being realized. So we are going to be exploring this paradox with a distinguished panel of speakers, and I please ask you to join me in welcoming them with applause. First, next to me, Jean-Jacques Soulacroup, is that saying that right way? The corporate banker for EU neighboring countries at the European Investment Bank. Next to Jean-Jacques, Tomas Fiala, Chief Executive Officer and founder of Dragon Capital. Next to Tomas, Matteo Patrone, Managing Director of EBRD for Eastern Europe and the Caucasus. Next to Matteo, founding partner and CEO of Horizon Capital, Lenna Koszarny. Next to Lenna, Chairman of the Management Board of Raiffeisen Bank Aval, Alexander Pesaruk. And next to Alexander, Mr. Khalid Mohammed Jolo, CEO of Nebras Power, global power development and investment company of the state of Qatar. So dear panel, we're going to have two kinds of questions on this panel. One is going to be blitz. It's a short question that I'm going to ask all of you, and please make sure that you time up your answer up to 2 minutes. We want a very concise and straight to the point reply, and then we'll have individual questions and we'll see how it goes. And of course, then take questions from the floor. By the way, we can take questions in two ways. There's a Telegram bot that you can write to. I improved on my yesterday performance. I'm now checking my Telegram, or you can raise your hands, and please don't forget to vote on this poll that we have on the screen. So the first blitz question to all of you: are emerging markets becoming more or less attractive for investment? And please state your reasons why, yes or no. Jean-Jacques, you're first, please.
Well, thank you, Nicholas, and I admire you to ask difficult questions on a Saturday morning. People will hate you this morning.
I know, you know, I take example from the Prime Minister's session. It wasn't easy too.
Excellent. Well, for the EIB, emerging markets remain attractive no matter what, in fact. We know that in times of crisis it will become a real challenge, but I think the fundamental is very simple, is that we are able, and we were able, no matter what crisis, 2008 and later, we were able to systematically find the right champions, and this is the key. Markets are, by definition, going through ups and downs. So for us, it's not the real question. The real question is to have some champions in each and every market that we are working in, and to identify them. This is the main criteria. This is the most important for us. So this is one thing, and the second thing is that in times of crisis, what is the most important is to have an in-depth understanding of the markets, but also of the businesses. And this extra effort, not a lot of investors are ready to make it.
But will you, as an institution, increase, decrease, or just keep the same level of investment in the emerging markets?
Well, it all depends, but in times of crisis, we are, we are the lender of last resort. At the end of the day, this is part of our fundamental mandate and role. We saw it in Europe, in particular, which is not an emerging market, but still the example is significant. When it was a full crisis, we were the only one to be able to lend to the market. And we are ready to do that outside Europe because, again, this is our fundamental role.
Fantastic. It's great to have such commitment from such an institution as EIB. Tomas, what about you? Are you guys going to increase or decrease your investment?
We kind of look at emerging markets top-down. So we look at global GDP growth, which obviously has been slowing down. We don't think there will be a recession, but global GDP is growing at a little bit less than 3%, which is quite a substantial slowdown and probably the lowest rate of growth in very many years on the one hand. On the other hand, you have very low interest rates globally, which you mentioned. We think that interest rates will stay lower for longer, and that leads us to the conclusion that it makes sense to invest in emerging markets and into Ukraine in particular, which enjoys very high interest rates, but at the same time declining inflation. So we have been investing already since 2015 into Ukraine. Have invested around $500 million together with partners over that time, and we would like to at least keep that pace going forward for reasons both global that I mentioned, lower interest rates for longer on the one hand, and on the other hand the changes that are happening here inside Ukraine, which make us cautiously optimistic.
Thank you, thank you. Matteo, what about you? Are you going to increase investment?
Well, again, as a development bank, it is our mandate to be anti-cyclical. So clearly, we will keep investing. If not increasing, we will maintain the high level of investment in our entire region of 38 countries, which are all emerging markets. So this year, we're going to approach the 10 billion bar, and the mandate of our board is to keep investing at that level. We may actually expand our remit, our geographical scope, still in emerging markets. But I don't think EBRD is a good example of what the attitude of, in general, investors may or may not have in the market. So clearly we have a peculiar investor. This is our mandate. We will keep investing. Going back to your question on whether there should be more or less interest in emerging markets in a time of crisis, really you need to be granular. It depends on the market, it depends on the structure of the economy in specific countries. You take two extreme examples, Azerbaijan after the end of the super cycle of commodities in 2014, 2015, that was a perfect storm. Commodities went down, the economy was completely undiversified. The part of the economy that was non-oil and gas was completely unreformed. There was a very high exposure to foreign currency lending, so the banking system went down, the economy went down, and that clearly was not a great place to be at that time. You take Poland in 2009, Poland grew at the epicenter of the crisis by 1.6%, while the rest of Europe was in deep recession at minus 4.7%. So it really depends. My view of emerging markets is that you should actually keep a very long-term view and invest through the cycle, not ride in the cycle.
Thank you. Thank you. Lenna, nobody wants to give a simple answer to my complex question. Would you be so kind to give it? Are you going to invest more or less?
Thanks, Nicholas. Definitely more. Definitely
Good.
more. This week, actually, it's a good time to talk about this because we just finished our annual investor meeting. We had our investors come this week to Ukraine, so we were able to find out what they think in terms of any kind of global recession, what they think of emerging markets. It was extremely interesting. We had investors from the they have about over 350 billion in capital investing throughout the world. And what I heard most of all was opportunistic. I think I heard that word from almost every single investor, that you have to remember, they have if it's a pension, they've got their pension boards. They're going to have always investments in developed markets because there's rule of law, because it's predictable, because you can get that investment through your pension board, your board of trustees. At the same time, they need to have a return, and they need to increase those returns that are declining in the developed markets. So they're combing through the globe, looking for pockets of growth, looking for niche, looking for opportunities. And Ukraine, if you look at Ukraine isn't even classified as a frontier market. by them it's not classified as frontier. It's not classified as emerging. Ukraine is this story that they're trying to wrap their heads around. And the way that we say to them is, if structural reforms are truly implemented here, we can see what we saw in Colombia, Philippines, and Indonesia, etc., where you have a long-term period of sustained growth and hopefully double digits or high single digits for 10, 15, 20 years. That's the opportunity that Ukraine presents, and that's interesting to them.
Thank you. Alexander, what about you? Are you going to increase your investment, lending to Ukraine?
Thank you, Nicholas. Yes, we're going to increase lending to Ukraine, both to companies and private individuals. More generally, I think emerging markets are relatively more attractive compared to advanced economies at this point of economic cycle. The global slowdown across the world basically faces the central banks to maintain loose monetary policy, which is normally favorable for emerging markets. But it doesn't really mean that all of them are attractive. I think investors and lenders need to be selective and choose those markets which are fundamentally sound, which have sound macroeconomic policy and have implemented structural reforms which facilitate growth and investment. In this respect, I think Ukraine is halfway there. Ukraine has done a lot of good work to implement sound macroeconomic policies over the last years. And they have also implemented some of the structural reforms necessary, but there is a job to do. I think Prime Minister this morning said that well.
Thank you. Hali, what about you? Are you going to increase your investment in the emerging markets? And by the way, what is the share of emerging markets in your current portfolio?
If I will answer, first of all, your question whether we are going to increase our share on the emerging market or not, the answer is yes. We are going to increase our share on the emerging market, and currently I think within our portfolio, at least 70 to 80% of our investment is in the emerging market.
Wow,
and we believe that there is no a single answer whether that each emerging market are equal or not. It's more related to it's always a risk-adjusted or a risk and reward balance where whenever you look for an investment, basically this is one of your main targets or your main consideration. And basically what makes a market, if I look into it from our perspective, what makes market more attractive than the other market is mainly the demand of the power as one issue, and the second issue is this transparency and the certainty about the policies within that market. And if we take an example here about the Eastern Europe in general, that we believe within the last decades when they opened their market for foreign investor or foreign investment in general, basically there was a huge amount of FDIs flows into this market, and that shows how these markets are good for or attractive for foreign investment. And maybe the availability of the fund coming from EU did play a good role in this, mainly and this is applicable for countries which are part of EU and non-part of EU from East Europe, where basically it's improved the transparency within these markets, it's improved the certainties within this market, and we believe that create a good ground for a future for these markets to be more attractive compared to other emerging markets in the world.
Thank you so much. So we have warmed up, now let's get to the meat. Jean-Jacques, how big is the EIB exposure to the emerging markets actually, and to Ukraine in particular? And you said that you're definitely going to keep investing in the emerging markets. If you can give your plans about Ukraine or other relevant markets, that would be very interesting.
Well, all right. I will try not to show bigger than I am, but our institution is in fact the largest in the world. International financial institution. Last year we lent 64 billion euros, and that's a leverage of 3 times, so roughly 180 billion of new investments that have been financed last year. I don't have yet the final figure for this year, so I will keep it for the moment. But roughly out of this amount, we have lent 8 billion in emerging markets.
8 billion.
8 billion.
Okay.
And here as well, we are talking about a leverage of 3 times. So 18 billion, I would say 18 to 20 billion of new investments that have been financed last year. And hopefully this year we will reach more or less the same figure. So it means that we are, I think we are a significant player. When we compare apples to apples, of course, in emerging markets we are smaller than the World Bank or even our colleagues from EBRD, but still, what we bring on the table is our knowledge of the European markets, European standards and practices, EU practices into the emerging markets. So that all being said, talking about the eastern region, last year we did 600 million, and this year we should be a little bit more around the 700. Out of this total amount, what you have to keep in mind is that for the last 10 years we have around 8 billion of exposure in the emerging markets and in the eastern region, and 2/3 of it has been in Ukraine. So
2/3 in Ukraine.
Yeah.
Wow.
So
we are the biggest consumer in the region.
Absolutely, and it will remain the same for the years to come, definitely.
That's very promising and very inspiring. Thank you, thank you. Tomas, you've been investing in Ukraine as long as I remember being in the private sector here. And with hindsight, was it worth it? Through all the volatility and all the crisis, did it pay off? And if possibly, if you can give your, I don't know, average ROI, what you're getting, so that you can inspire others to invest in this market, as much as you can share it, of course.
Okay. Well, we have founded our company here in 2000, so we have been investing here, doing business here for 19 years already. Over that period of time, I think we have achieved good results. The average IRR over that period is almost 35%.
35?
Yeah.
Here you go.
Which is not bad, despite the crisis. Obviously, Ukraine is a high beta economy, so when there is a world crisis, the GDP here declines corrects much more. We had the crisis in 2008, 2009, and then again because of the Russian military and economic aggression in 14 and 15. So when GDP is not growing or is correcting, is much harder to achieve these results. So, for instance, in the period between 2000 and 2008. We've been doubling our capital every year, so the IRR was 100% for a period of 8 years, obviously starting from not a very big base. We had just a couple million in starting capital. But, you know, over those 19 years, the results are not so bad. If you look at markets, we also invest in Central Europe, in Czech Republic, Slovakia. Recently, over the last 5 years, we also diversified into Asian markets.
How does this compare to Ukraine? Is that like for specifically East European markets, I wonder?
Well, you know, when I moved to Ukraine in 1996, I saw that Ukraine would be kind of developing like these markets on Ukraine's western border, just with a 3 to 4 year lag. That lag has unfortunately become a little bit wider. It depends on the sector. Some sectors are developing with a shorter lag, some with a longer one. So it always makes sense to follow what's happened in those markets, in Poland, Czech Republic, etc., because a lot of the things are repeating themselves here in Ukraine. So it's not a question about having the best idea here in Ukraine, but implementing it in the best way. It's about execution. So those markets are clearly ahead, and they are for us an inspiration, whether we invest in private equity or in real estate or our securities business, you know, making markets in bonds and equities, debt capital markets, equity capital market services for companies. This is something where we look for inspiration and ideas.
So far sounds very positive, thank you. So EIB is going to keep investing. 2/3 of the regional appetite is actually for Ukraine and consumed by Ukraine. You really pointed out, very good reasons to invest here, let alone your average IRR. Matteo, EBRD announced an ambition this year to double its investment volume in Ukraine. First of all, I wonder why. Is it a commercial decision because the bank has been reaping fat profits in Ukraine? Or is it more of a political decision because you want to support, you're mandated to support the growth of the developing country? And secondly, are you delivering your commitment? Are you meeting those ambitious goals of doubling your investment in Ukraine this year?
Thanks very much. The simple answer to your first question is because it is our mission. We are a development bank, so our mission is actually to deploy money in our country's operations. Why do we do that, and which are the ramifications of that? Ramifications of that indeed are commercial. We are not a profit maximizer institution, but our shareholders, including the Ukrainian government, are happy when they see a bottom line, which is good enough at the end of the year. But also, being a development bank, we have a strong policy engagement mandate, and the more we invest in a country, the better leverage we have to engage in policy dialogue and technical assistance, and also in some difficult conversations with our institutional counterparts. Ukraine is clearly a market incredibly important and strategic for the EBRD. It is true that we are the first foreign investor in the market, but it's also true that Ukraine, portfolio-wise, is the second market for the EBRD after Turkey. And going to the answer to the second question that you asked, yes, indeed we are delivering. We passed the mark of 1 billion euros in the middle of October. The books are not
You have already passed that mark?
Yes.
Fantastic. Wow.
The books are not closed yet, so we will end up in the range of 1.1, 1.2 billion euros by the end of the year. The portfolio, well, the portfolio is historically pretty well balanced, but also the investment flow of this year is pretty well balanced. We have about 60% of investment in the private sector, the agribusiness value chain, general manufacturing, IT, quite a bit of renewable energy. And then we have the infrastructural sector, which is both energy. We lent to Ukrenergo. We subscribed the first bond of Naftogaz when it went back to the markets in the summer, and it's transport infrastructure, both at national level. We subscribed the TAP issuance of UZ in September, and we are engaged in a number of regional roads, but also at municipal level in a number of municipalities, quite a bit of those in the eastern part of the country. So clearly, again, we are the biggest investor here, but actually Ukraine, as I was mentioning, is very important for us, and most probably at the end of this year, Ukraine is going to be the first market for the EBRD in terms of investment.
The first?
Yeah.
Amazing. Well, I was very surprised to hear that you actually even more than doubled already this year your investment in Ukraine, and I think it says a lot. Lenna, you've just announced Ukraine House in Davos this year that Horizon Capital raised a new fund of $200 million to invest in Ukraine. Clearly, you see more opportunities than risks. First of all, how is it going with the fund? Tell us about your fund. How is your investment going? Do you still have some money left for those who might be interested? And also, I would like to give a brief comparison. Why is it better to invest in Ukraine than, say, in Poland, Turkey, or Kazakhstan? Or maybe you are investing in those adjacent countries too.
Okay, so in terms of the new fund, I think the audience will probably be surprised to hear that even though we announced it in January, we've already done 9 deals in this fund. We have one more deal, deal number 10, that's in due diligence. It will be close to being done. We have 3 to 5 identified. I mean, basically, this fund is almost wrapped up.
There you go.
Yeah, and that's because of all the opportunities in the country. So if I step back, Horizon Capital, we do one thing. We do growth equity. We invest alongside visionary entrepreneurs. who have a fantastic idea, business model, strong team, very clear in terms of their vision. We back them with equity capital so that they can realize their strong growth ambitions. And that's what we do. We do only growth equity. We've raised about 700 million since going private in 2015. So this 200 million is the latest fund. But we launched it, we announced it in 2019, but we really launched it and invested a great deal of it during 2018. So what I'm saying is that I'm going to be back in the market sooner rather than later to raise additional funds because the opportunities here are very strong. We see them in export-oriented companies, in IT, like manufacturing, food and agro. We see it in IT tech. I'm sure in the market, you've seen announcements about us entering IX. We've seen announcements about Rosetka-Evo merger and backing the largest e-commerce marketplace platform. We also like sectors where there's structural change. The Dobrobut investment is another healthcare investment after the Biopharma investment that we made with partners who I see here today in the audience, Kostya Yefimko and Vasyl Khmelnytsky. And we believe that we will be back in the market very soon. We have put in over 200 million since 2015 at times when other investors stayed away. But that's equity. If you look at how much debt also came into those businesses because we were willing to put in equity, I mean, it's 1 to 2 times more. So we're bullish in terms of Poland, Romania, or other markets. Look, we see bolt-on opportunities. We believe that, you know, maybe also people have heard about the IPO that we did, Moldovan company in Bucharest. So Moldovan winery lists in Bucharest, Romania at over $100 million. Those opportunities are present here as well. We see bolt-on opportunities where Ukraine-based platforms can bolt on with a Polish platform listed in Warsaw, or Moldovan-based, same thing with Romania. So we see opportunities in terms of regional extensions and also companies that are based in Ukraine but going global. They may have 100% of their operating platforms in the country, but 70 to 100% of their revenues are generated globally, which really hedges against macro risk and lots of opportunities in that space.
Thank you, Lenna. Very impressive. And now I know who I go to for my Moldovan wine too. That's handy. Alexander, you now lead the biggest private bank in Ukraine, as far as I'm concerned, which is also a part of a large European group. What are you planning to change the most? What are the most radical, new, innovative changes that you are planning to implement, if any, in your institution? Are you going to open some new sectors for your bank in Ukraine? Please tell us. We're all excited to hear about that.
Thank you, Nicholas. I think the radical changes in banking and maybe surprises are not necessarily good things. It's a fairly stable industry. And the Raiffeisen Bank of Al, as such, is acknowledged as the leading bank in Ukraine. The bank has a wonderful client base, strong brand reputation. It will continue to be one of the largest lenders to the Ukrainian economy. So we obviously acknowledge the digital disruption of banking industry around the world, and also here in Ukraine. So we and the bank will have to adapt. So we'll definitely invest in new technologies, in digital solutions. We'll invest in people with special skills to ensure that we deliver products to our clients that clients would love. That's basically what we will do. So no major industry sector. I think Ukraine, we know it well. I think we will continue be the leading bank in the agro-industrial complex and the agri-industry of Ukraine. We will try to diversify away from agri and to increase our presence in other sectors as well. So it will be basically a growth of the business with some diversification built in and technological innovation.
Thank you. Thank you. Khalid, though Nebra's Power is, as far as I'm concerned, a relatively young company, it's just 5 years old, you've demonstrated staggering pace of growth and global expansion, and you now operate, correct me if I'm wrong, more than 2.5 gigawatt of capacity globally. We know that Qatar is the global leader in the export of liquefied natural gas. Where does Nebras strive to become a global champion?
First of all, if you allow me to update the number, the current number is 6 gigawatt of total gross capacity that Nebras operate within our portfolio. And basically, since day number one, when we created Nebras, Nebras is a company owned by the government of the state of Qatar, and it's part of the government plan to diversify from the oil and gas and to start the investment in the international market. We classify ourselves as a utility. We are not a financial investor, and we are a long-term strategic investor in our investment, and always we are trying to be selective in our investment, where we make sure that we do have an involvement in the overall management and of the project we are investing in. With regard to the relation with the state of Qatar, and Qatar is being the biggest exporter of LNG, I think definitely that will add value to Nebras, especially when we are discussing the gas to power solution, and we've seen like more and more countries are going toward that solution. Qatar today, it's the biggest exporter of the LNG, and Qatar currently are also expanding its like LNG capacity, and we believe by 2025 we'll be able to increase that capacity by at least 42%, and definitely that give a very good advantage to Nebras, especially the good relation that we have with Qatar Petroleum and Qatar Gas, and we are currently in a discussion of LNG solution in so many places in the world, especially in Southeast Asia. That does not mean we'll invest only in gas. I mean, renewable is very good fuel that we are considering, or type of technology that we are considering. We believe, and most of the market analysts, they believe by 2050, at least 80% of the global electricity or power will come from clean energy. And when I say clean energy, I mean gas and renewable. And we are trying to make sure in our plan for the midterm, 5 to 7 years, to triple the capacity that we are having today, and to invest more and more towards renewable and clean energy.
Thank you for that. Jean-Jacques, back to you. So, which industries do you think should be prioritized for investment in Ukraine, and which industries specifically EIB will focus in Ukraine on?
Well, you know, the EIB has been always invested into two main categories: infrastructure, heavy infrastructure, and private sector. And not a lot of people realize that, but roughly half of our portfolio is to support the private sector all over the world, not only in Europe, but outside. And this reflects as well in Ukraine. Traditionally, we have been investing heavily into infrastructure to support the country in its worst days. And also, we have been lending heavily for banks to intermediate our loans to SMEs. So that has been the setup for a couple of years, for the last years at least. And nowadays we are changing. As a matter of fact, we always change, but it's part of our trauma, of our daily trauma. But nowadays, and for the coming year and years, we will refocus our attention on two areas. The first one is digitalization. And I do not say that to please our host today, but because it's a reality, and it's a reality also given to us by the European Commission. So digitalization is very high on the agenda. To give you also some ballpark figures, for the last 10 years, the EIB has invested 32 billion euros of investment into the digital sector. So we are significant, and we have an experience that is relevant. And based on that, we hope that we will bring real value added to the sector here in Ukraine. The second thing is that you certainly have heard about it. We are reforming ourselves into the climate bank of the European Union, and to that extent, now everything that we will do, apart from digital that we already consider being a trigger for climate change, but every investment that we will do will have to have a very strong element of climate change to justify our support, be it in the traditional infrastructure or the renewable energy and energy efficiency. Of course, renewable energy is a big question mark in this country. We are in a transition period. We are still waiting on the sidelines, but as soon as the overall legal framework will stabilize, we can become a big player as well.
What are the sectors except renewable energy you think are the best for investment in Ukraine today?
There are plenty of them, but I would say to go back to the basics, I think that, and the bank thinks that what sectors should be relevant for any country, not only Ukraine, but any country, is both the natural resources / value chain. Natural resources per se are not very profitable, are not very, I would say, a growth engine, but increasing the value chain, the transformation of these natural resources is key. Talking about Ukraine, going upper in the value chain of agriculture, this is where we see growth. And of course, any innovative industry should be really the main focus, because today, between the basic needs, because the world is hungry for resources, so we have to support that, and the innovation sector, the innovation industry that will disrupt the normal way of doing business today, these will be the two areas where growth will be.
Thank you. Tomas, coming back to dragging capital, it's not a secret, wouldn't be really a secret if I said that you've been on a real buying spree over the last couple of years, particularly in real estate. So are you going to ramp up, slow down this buying spree in real estate in Ukraine, and why? Maybe you can give us reasons why you're so interested and successful in this industry in the country, and what are other sectors that you're targeting except real estate in Ukraine?
Okay, thank you. Yes, we have indeed probably hold a record in the number of applications to the Anti-Monopoly Committee over the last 4 years. We have done, probably 3 dozens of deals since 2015, 2016. In 2015, it was still just private equity. The first deals in real estate we closed actually in 2016, when we were relatively comfortable, not 100% comfortable, but we were comfortable that the worst is over in terms of macro and the military conflict with Russia. That the conflict is not going to widen further, and that the economy has bottomed out in 2015. Why we invest in real estate? That's what I said at the beginning. We think that the global economy is slowing down. The interest rates globally will be lower for longer. The cap rates on real estate in developed markets and in emerging markets on Ukraine's western borders have reached all-time lows. And we assume that this macroeconomic stabilization in Ukraine will also lead to lower inflation and lower interest rates. And also the real estate sector has been one of the hardest hit. It created the highest level of NPLs in the banking sector. Banks stopped lending to the sector completely, and there were a lot of banks who ended up with non-performing loans or with real estate on their balance sheet. So there was a lot of supply of real estate that one could buy below replacement cost at quite a substantial discount to replacement cost, with cap rates in the beginning of 15 to 20%. And one could assume that, let's say, once the vacancies, which were at that time extremely high, for instance in KIEF 30% of the offices were empty, that once the vacancies will reduce, the rents will go up. And this assumption has proven to be right. Vacancies in offices are down to around 5%. Rents are growing at 15% per annum. And the same is the case in warehouses, where we made also a large bet and bought almost 20% of the supply of logistics space in Kiev and in Kiev region. And the same in shopping centers, where you see the growth rate in nominal salaries at 20 to 30%, and increased consumer confidence is making the turnover of retailers grow at high double-digit numbers, which supports the net operating income growth of also around 15% in that segment. So we have a lot of experience in real estate for the last 20 years. We have developed a lot of real estate across all the segments, including residential, and we have invested in that sector also outside of Ukraine. So we understand that very well. We have a large team. There's more than 100 people that is managing this. It's now by now almost 700,000 square meters of commercial real estate, and we have in the pipeline more deals. So we plan to grow it at approximately the same pace, not slowing down, not accelerating. It takes time to digest these deals and to manage them properly. And we are very hands-on. We buy, in real estate, we buy controlling stakes, or in most cases actually 100% of the real estate, and we are very much hands-on in managing these assets and improving their performance, because they are in many cases mismanaged by the previous owners, or for the banks it's not been a priority. Some we buy also from the deposit guarantee fund. On private equity, we also follow actually the same strategy. We have invested over the last couple of years in IT and e-commerce. We have a couple other deals in other sectors in the pipeline for the next half year. Their deals are a little bit more difficult to close. So out of the $500 million that we have invested, about 20% is private equity, it's operating companies, and 80% is real estate. Because as I said, we buy only majority stakes, and we are very much hands-on, so it's in private equity it's more difficult to find the right company, to persuade the current owners to sell you a majority stake and let you manage the company at the right price.
Thank you. Matteo, you've advertised actually on this panel that EBRD is not shy of using its political leverage in a country where it invested a lot in. And based on that, what would be your advice to the new government, to the new Prime Minister, on the first and most important steps that it must take to ensure the economic growth and prosperity? And what, by the way, as you're going to be exploring, telling about it, what instruments in the government's toolkit do they really have to stimulate and streamline that economic growth?
Okay, let me start with the second question, maybe. I tell you what the government doesn't have as an instrument. The government doesn't have fiscal space and doesn't have monetary tools to put the economy on a dope regime. There is no Red Bull in the market for the government. So the way the government can achieve, the leadership of the country is not only the government, is a synergetic action by the presidential office and the administration, the Rada and the government. This is actually the biggest opportunity Ukraine has in years to have an alignment of stars in that sense. So what can they do in order to achieve the 40% GDP growth over the next 5 years is structural reforms, is hard work and structural reforms. And actually, I was very pleased to hear what the Prime Minister said this morning, which was exactly in that direction. How to achieve that? To me, the first three priorities the leadership of this country has now are indeed the rule of law. And we can debate about the recently approved law on 1008 on the Supreme Court. There are elements which are fairly positive, elements that possibly could have been better thought through before approving this law. The Venice Commission will look into it, and let's see how that could be amended or fine-tuned. But definitely the entire area of rule of law, anti-corruption and judicial system is absolutely crucial to establish a level playing field and attract FDIs in the country. The second area, which is crucial to a number of foreign direct investors because it establishes the credibility of Ukraine as an investment destination is, and again, I'm pleased that the Prime Minister mentioned that, is demonopolization and de-oligarchization in a number of industrial sectors, obviously energy being the obvious one. And the third one is anchoring the macroeconomic stability that this country has reached through the agreement with the IMF on the standard fund facility. One of the reasons why we've been very successful, and particularly successful this year, is because we could ride on the macroeconomic stability and the appetite of the markets on Ukraine. The fact that Naftogaz, UZ, could go to the market, Naftogaz went to the market again last week, it is a sign that the work done by the Ministry of Finance and in conjunction with the National Bank on the banking sector has been very good and very successful over the years. Now, you need to anchor that with the IMF agreement, because in particular portfolio investors, which were the majority of the investments coming from abroad in the country, the appetite of these investors was hinging on the assumptions that there's going to be an IMF agreement. So that is absolutely crucial. Then obviously there is infrastructure development, possibly crowding in private sector, but there is also something that the government and the leadership, again, needs not to do here, is introducing element of unpredictability in the market. We had discussions, we are hearing discussions about renewable energy. I think the debate now is heading towards the right direction, but in the past couple of months we had rumors, noises, and which we could frankly have done without. But I'm very pleased that actually we have a constructive discussion as financiers, as the industry, with the government in this sense. Another thing that absolutely needs to be avoided is jeopardizing the independence of crucial institutions in the country, and as a result of that, risking the unraveling, the pegdaling on what has been achieved in the past, which is not small feat since 2014 in a country which is at war. The reduction of the space for corruption through a number of initiatives has been achieved. Now we need to go forward and to the next step, actually going after the assets and going after the culprits. But the reduction of the ability of people to exercise corruption actually is an achievement that needs to be preserved. And so, again, preserving independence of institutions, in particular the National Bank, is absolutely crucial.
Thank you, thank you. Lenna, piggybacking on what Matteo said, what do you want the new government to do the most? Like, what is your one most sacred goldfish wish that would change anything for investors in this country, and why?
One word: courts. That's the word. You know, and I say that not with just my Horizon Capital hat on, but I'm also chair of the American Chamber of Commerce in Ukraine, 600 members. We did a survey together with Citibank. Thank you very much, Citibank. Matteo and I are on the board. And I mean, this number may shock you, but I'm going to read it. Who creates the biggest obstacles for business? 74% said the courts. 74%. 51% was tax authorities. 48% was law enforcement agencies. Okay? Ukraine, after 27 years, needs to put this issue off the table once and for all. And a response that we are going to take time to reform, 9,000 judges, you know, please be patient. We're happy that there's alternative models being looked at. And certainly we think that that's a very good idea. When we hear the Ministry of Justice, when we hear others talking about actually an international arbitration court for investors in Ukraine, we think that's a good idea. We look at the Kazakhstan model. It's not perfect. There's only 1 to 2 cases, but the fact that it was a headline-grabbing game changer globally, that investors heard about it, asked about it, all of a sudden thought about Kazakhstan in a different way. I mean, we need a game changer from a court in terms of the courts. If you look at FDI, let's look at the best years in Ukraine, starting in 2004. What, about 39 billion in FDI over 5 years. 10 years later, 2014, about 13. 3 times less, 13 over the last 5 years. So if we're talking about 50 billion in FDI over 5 years, 50 billion. Okay, I look at my fellow panelists. I mean, I think between us, we'll do, 10, okay? Assuming the structural reforms, assuming conservative, I see the weight for at least 10, but where's the other 40 going to come from? Large-scale infrastructure, privatization, concession laws, and all of those require a court system that functions. So before privatization, before concession, before all of that, I've heard the estimates from within the US side. It's 6 months to 9 months to launch it. Start it now and make it happen.
Thank you. Thank you. Before I move on with my next question, I would like to remind you, dear audience, please write your questions into our Telegram channel. I actually read them, so I see them. You can write it, and it's the most effective way to ask them afterwards to our distinguished panel. And keep voting on the poll we have on the screen. It's very interesting to hear also what you think in addition to our discussion. Now, Alexander, bankers say that tough conditions of debt financing in Ukraine, like high interest rates, hard collaterals, personal guarantees, no project finance, are the reflection of the risks of doing business in this country. In turn, business people say that such requirements stifle their business activity and make them uncompetitive comparing to foreign investors in Ukraine. Now, you just heard from Matteo that we actually the country doesn't have fiscal instruments to intervene and inject Red Bull in the market. So we, private sector banks and companies, are face to face, all alone. What are we going to do about it? How are we going to break this vicious cycle?
Thank you, Nicholas. I think the question is why interest rates on bank credit are so high in Ukraine is an easy one, because Prime Minister answered the question for us this morning.
But it's not just interest rates. I mean, actually, interest rates are now mostly okay, especially in foreign currencies. But other conditions like hard collaterals and personal guarantees and not financing of certain developing sectors is a bigger issue.
Look, the high cost of I'll still stick to the bank interest rates. That's what we do, actually. So there are 2 main reasons for that: high risks and high inflation. I mean, if basically financial transparency, lack of financial transparency of the borrowers and lack of protection of creditor rights leads to a high probability of borrowers' default and difficulty in enforcing and selling the collateral. That all ends up in the interest rates. The inflation is high, we know that, so they've been on a downward path, and we clearly see the very consistent monetary policy of the National Bank of Ukraine, which leads the interest rates to gradually go down. We see the National Bank being on that downward path under the baseline scenario in the years to come, so we probably see the bank lending rates go into high double digits or even low single digits in the next 2-3 years under the baseline scenario. But that is indeed under the baseline scenario, meaning that all macroeconomic assumptions underneath the monetary policy decisions remain valid. And there are a few of them, but most important, as my colleagues on the panel have already mentioned, is the new IMF extended fund facility. It all depends, or many things depends on that. If we see the new program in the next few months, then those macroeconomic assumptions remain valid from my perspective, and the bank lending rates and interest rates will go down. So we will get gradually out of this paradox that the cost of credit is so expensive, but again, referring to the Prime Minister this morning, it can't happen overnight. It will take a few years to get there. Simple as this.
Thank you. Khalid, the question to you: how do you assess Ukraine's investment attractiveness today? And beyond energy and renewable energy, do you see broader cooperation between Qatar and Ukraine, like for instance in agriculture or real estate?
First of all, the way we see it in Nebras, when we select our investment, basically we are looking for diversification, and that diversification is for both, for technology and for geography. Currently, we have an investment in Latin America, and Australia, and North Africa, Middle East, Southeast Asia. We don't have any investment in East Europe. So looking to East Europe countries, we believe Ukraine may be one of the most attractive countries for investment in the power sector. And that's for many reasons. One of them is that the recent announcement by the government where 25% of the installed capacity will need to come from renewable sources, and that includes the decommissioning of coal power plant. So we believe there is a good demand for the power here. Plus the country, they have installed so far 5 megawatts of this power, where they have proven that they are committed to the program they have made, and take into consideration the political and commercial situation which was there over the last few years, and achieving that, we believe that's a very good achievement. Plus the offtake arrangement that's been provided by the government here. All this makes the investment in Ukraine attractive for a company like Nebras. And your second part of the question with regard to the broader relation between the state of Qatar and our investment from state of Qatar into Ukraine. Nebras is a part of a bigger group, which is Qatar Investment Authority. We are 40% owned by Qatar Investment Authority, which is the sovereign wealth fund of the state of Qatar, and they are having a portfolio of almost $350 billion. And that portfolio basically covers different sectors of investment, include power is one of them. And we believe that if we manage to have a successful deal here in the power sector for Nebras, that definitely will open the door for more investment of our brother company within our portfolio to come here and invest in Nebras. Plus, we talk about renewable, but also the gas to power solution. I mean, you mentioned earlier, Qatar is one of the biggest exporter, or is the biggest exporter of LNG worldwide. So gas to power solution, or bringing gas to Qatar, that could be part of the government to government or a broader cooperation between Ukraine and Qatar.
Thank you. Thank you. So, because we're a bit behind the schedule, I think I will hold back the second blitz question for the time being, because I really want to take questions from the audience, and actually have a couple of them in the Telegram bot, KIEF Telegram bot, and two of those questions to you, Khalid. So we'll stay with you. The first question is whether your company is planning to invest in green energy in Ukraine, and second, whether you have any intentions to bid for the state tenders to explore oil and gas on the Black Sea shelf. Honestly, I didn't know we still have Black Sea shelf. I thought it was going with Crimea, but I'm lucky if we do. So are you going to invest in renewable energy in Ukraine, and are you going to participate in the state tenders to explore oil and gas on the Black Sea shelf in Ukraine?
The answer is yes. We are looking for investment in Ukraine. That's one of the reasons why we are here today. And basically, we are having a couple of opportunities which we are considering, and we hope by the first quarter of next year, we'll be able to announce a deal of our investment, our first investment here in Ukraine. I mean, with regard to the oil and gas, we are only investing in power sector, so that's not relevant to us.
Not relevant, thank you. Okay, please send more questions. I want to see more questions. Type faster. Or maybe we'll take selected from the hand. Is there any? Please bring the microphone over here, please. No, over here to me, to this front row. Close it to me, please. Bring the microphone over here. Could you please bring the microphone over here? Принеси, будь ласка, сюди мікрофон до
Can I have this microphone here at the first row?
Microphone. We're going to take the question. There's another question that we have. I don't know who's addressed to, but we have the microphone. Good, please go ahead.
It's Mikola, thank you very much. Vladislava Magaletska, I'm Vice President of Sigma Blazer Fund. So actually my question to Mr. Jolo, you know, in terms of the problems that we have here in Ukraine, you mentioned about the energy independence. You would like to make investments here, but so actually my question, the energy sector right now become more and more open, but still there are a lot of problems in the sector. And we do hope that the monopolies that we have in this sector will be more decentralized, like unbundling and so on. So having in mind this, would you like to be a strategic investor in some kind of our government companies and to bring them efficiency? Because unfortunately, in our government companies, there are no efficiency in the energy sector. Thank you.
First of all, I don't think that there is any market which is risk-free. So it's the nature of the business that we are doing. Whenever we'll have to go and make an investment, definitely there will be a risk. And this is how we always calculate our return, where we always say it's a risk-adjusted return for our investment. And this is like mainly which makes us like select market than other one. Definitely we would like to become like a partner here in the developing of the power sector within Ukraine. We are not at the stage where we can be a strategic partner, where we can develop the sector, but definitely will be an adding value to the sector. Could take into consideration that we are a long-term investor, and the model that we are following in Nebraska is basically whenever we go and start an investment in any country, that's always our first investment, is like we try to understand the market more through that investment. And I can give like an example for investment in Jordan. When we started our first investment, that was 5 years ago with the start of the establishing of Nebraska. Today we are operating 4 power plants with a total capacity of 17% of the grid of Jordan within our portfolio. So this is what we'd like to see here in Ukraine and with all our investment. And we hope we will be like part of the successful story here. Thank you.
Thank you. So I have some questions here in Telegram bot. They are not addressed to anyone, so I'll take the liberty of being a moderator and assign it. Alexander, a question to you. How do you assess introduction of cryptocurrency in Ukraine and use of crypto technologies in Ukraine? You said about innovations in your bank. Are you going to implement something in this field in your bank?
Thank you, Nicholas. The cryptocurrencies is a popular question, and probably the simplest answer, if there is any simple answer to this, is basically it has pros and cons as anything. So they could facilitate technological innovation, they could reduce the cost of payments, cost of processing. It could be a good base for developing some customer-friendly solutions, all true, but we also need to acknowledge that cryptocurrencies has implications on monetary policy and on financial stability. I mean, this is what the IMF looks at the moment. That's what the major central banks around the world are looked at, with the idea that they should not stop the innovation of cryptocurrencies and the good practical application of cryptocurrencies, but making sure that the monetary policy and financial stability are not damaged. That's the broad answer. In terms of Raiffeisenbank Kaval, as I mentioned, technological innovation and digitalization are at the heart of our strategy at the moment and is one of the core priorities. But I wouldn't think that we would implement the cryptocurrency in Ukraine at least in the next 2 to 3 years. That's what my answer.
Thank you. Now I have a question to Jean-Jacques and Matteo. How do you evaluate the opening of the land market in Ukraine, and what prospects do you see for the Ukrainian investors alongside with the international investors in this field in Ukraine? And I'll be even more provocative here. Don't you think that with cheaper access to cheaper and bigger volumes of capital, the playing ground will be sort of tilted towards the foreign investors in Ukraine, and Ukrainian investors will be disadvantaged in this case. What do you think, Jean-Jacques?
Well, that's a very tough question.
Yeah, I know. That's why I like it.
I would say this is indeed a very, very difficult question, because it has a lot of implication, and I would put the focus on the social implication first and foremost. Land reform, privatization of land and tradable assets as land is a good thing per se, but it has to be done extremely gradually. I will take the example of France, which is my country. It took years, decades to implement it properly. So I think this in Ukraine, you should not put the cart before the horses. And I would recommend, though we are not a policy bank where you just implement the policy, I would recommend to make it gradual by first tackling the state-owned land, privatizing it with decent measures to avoid, yes, the land grabbing from big holding companies or by foreign investors, and secondly, with a lot of consultation, then tackle the question of the private land owned by small farmers in particular. Nowadays, the system of land lease is functioning, even though it's not efficient. It is functioning, and it is functioning, I would say, reasonably well in terms of rents level that are, as far as I can see, systematically higher than what the government has put as minimum rates. But in terms of selling and trading of land, then I think the same work has to be done. Minimum limits, volumes, timeline has to be there.
Thank you.
This is my personal experience by financing big names, big agro companies.
Thank you. Sounds very reasonable. Matteo, what about you? What do you think?
Well, I completely agree with the assessment that Jean-Jacques has made. There is a flurry of legislative action currently in the radar, and the mantra we are hearing, in particular we have heard in Mariupol last week, is we need to rush, we need to be quick. We're going to make mistakes, but then we're going to amend mistakes. Land reform is exactly that kind of place where you cannot make any mistake, because they are going to be reversible. So let's take a pause for reflection. Let's make it gradual. Let's make it right. And let's preserve the rights of small farmers. That is where a particular attention should be put on.
Thank you. Thank you. See, you even earned your round of applause. Tomas Fiala, question to you. You invest a lot in real estate that is commissioned. Do you plan to invest in development of real estate? I wonder myself too, by the way.
Yeah, well, we have done a lot of development in the past when there was no supply or not enough stock of commercial real estate. Back in early 2000s, there we have predominantly developed real estate, several 100,000 square meters of commercial and residential. Currently, we also continue developing, but on a smaller scale. As I said, there were opportunities, especially from the banking sector in the past years, where one could buy real estate below replacement cost, and while you had large vacancies in all the subsegments of commercial real estate, it didn't make sense to develop new. So now we have actually done some land banking again over the last years, and already starting to develop projects that once the rents go up a little bit more, it will start making sense to start developing, and also when banks will start providing financing for this, because that enhances the returns that we are able to achieve. But a little comment on land.
Does that mean that you're now achieving higher rate of return on the commercial buildings than on the development?
Over the last 3 years, yes. I mean, basically the real estate that we have bought back when we started in 2016, the IRR on that is above 40%. It's a short period of time.
Impressive.
Obviously, but we have used some modest leverage in the beginning, some deals without leverage, some deals with a loan to value of 30%. Now it's on some deals you are able to raise up to 50%. Leverage is quite expensive, unfortunately, but it allows you to achieve or on the early deals now, on the deals that we are targeting now, basically the return on equity will be closer to 30%, I believe. But one comment on land, I think my colleagues, they have expressed a little bit more conservative view on the process. I've been following this for the last 20 years in Ukraine. And my recommendation would be to use the window of opportunity of the political opportunity and the political will very early, because it's kind of unavoidable that the political capital that the current leadership has may go down with time, and it will be harder and harder to push unpopular reforms through. So from our end, again, I'm also, like Lenna chairs the MCHEM, I'm the president of the European Business Association, and businesses in general very much support the government in actually carrying through this reform, which, depending how you ask, how you poll people, you know, sometimes it's less supported, sometimes it's more supported. You know, if you ask people whether the owners, these people living in the villages, and there's about 7 million of those who got land 20 years ago, whether they should have the right to actually sell the land or use it as they wish. The majority of the population actually supports that they get this right. And I think it's actually the law that was developed by the government. There's one that was developed by the parliamentary agricultural committee. Either of the two is fine, and I think it should be approved before the year end, because the longer it takes to debate this, the more it will be diluted. And we as international investors, we are fine if there is a period of 4 or 5 years when only local investors will be allowed to buy the land. There's no problem. There have been such periods also in Central European countries, but I think the law should be put in place. The market should be introduced from October 1st next year. It's going to boost GDP, it's going to improve the investment climate, it's going to encourage us and other investors to invest in other sectors of the economy as well.
Thank you, thank you. And the last question to you, Lenna, you're going to love it. It's the real cherry on the cake. Do you see the impeachment proceedings against Donald Trump directly or indirectly potentially impacting investment situation in Ukraine?
Thanks a lot.
How do you like that?
Thanks a lot. Thanks a lot. Okay, so everyone who knows me knows that I always, you know, there's two sides of every coin, right? I mean, you have these. Ukraine obviously is being talked about a great deal, and particularly in the U.S. We have one of our partners who thinks no publicity is bad publicity. You have others that think this is toxic for Ukraine. I think that over the next year, if U.S. companies do not see the opportunity in Ukraine, the ground floor opportunity, then their place will be taken by Asian investors, Middle Eastern investors, and others for whom this is noise. So I hope, you know, our funds, obviously we've got US, European investors in our funds, and who are invested, who have been invested in Ukraine for 10, 20 years. They're continuing to invest. At the same time, I think it just opens the door for others who see that, you know what, none of that really matters. The fundamentals in the country, you got ground floor. You look at Ukraine, our nominal GDP, right? Our real GDP, it used to be 180 billion, right? Tomas, you know all these numbers by heart. 180 billion before 2008, right? It dropped to 117, it crashed down to 90, and now it's about what, 135 billion by year end? 150 this year, okay? We're not even at the levels of 2008. That is ground floor. And if they get it right, going back to, I think everyone on this panel talked about structural reforms, this is now or never, this government has a mandate, they really can unleash growth, they have the opportunity to tackle challenges like land reform that we've been hearing about for 16 years. If they get this right, all of us will be in a year or two saying how smart we were early, I'm sure lots of investors wish they were in Poland in the 90s, and had that J-curve. So I hope that all of us benefit from that J-curve, and it's not just, I hope that US investors are on board too, and disregard the noise that this next year will only bring more of.
Yeah, hold a sec. I want to break my own rule, and because there's a very good question that I cannot not ask, and I want you to comment on that, because you've all said a lot here about the structural reforms, efficiency on the government, praise Prime Minister, what he said this morning. But the question is, do you guys believe in government's efficiency when average salary of a minister is 600 euros per month? Deputy is 450 euros per month. Have you seen anywhere in the world efficient government with such ridiculously low official wages? Now, this is a serious question to me, for instance.
No, that is a serious question, and I think that's, you know, the new, Max Nefyodov has talked openly about this. I mean, he's got to tackle customs, he's got to tackle contraband, and he's dealing with customs officers who are paid peanuts. Okay, so I mean, this is a fundamental issue. At the same time, all of us who are in business, we see enforcement agencies, we see the tens of thousands of people who we're not sure why they're there, you know? So obviously, to increase the salaries of a huge, bloated enforcement agencies and organizations that really should be cut in 10 times, I mean, I think they will get a salary increase when there's 10,000 of them and not 100,000 of them. You can't raise 100,000 people's salaries. So I agree with you, the salaries have to go up, in particular in customs and other, but you know what? Investors can't wait for that. That's why you've got to do novel approaches. I mean, we're hearing ideas floated around like, you know what? We've got concession law, outsource customs. Seriously. Concession, 5 years. Have someone come in, run it, pay people well, and then hand it back to Ukraine in 5 years. There's an idea.
It's a bright idea.
You know what? Let's do novel things, because waiting for people's, you know, to cut 100,000 people and to start raising their salaries from 200 to 300 to 400, we don't have that time.
Thank you so much. Ladies and gentlemen, please join me in thanking this amazing panel. I really love it and enjoyed the discussion. I hope you did too. And, you know, we heard except of the righteous criticism and very sober and realistic outlook on Ukraine. We also heard mostly positive things, that all of you are going to increase your investment in Ukraine. And by the way, our room agrees with you, because most of our people, so 45% would invest both in emerging markets and in a developed country, and 34% would invest only in Ukraine. Thank you.